Hi, everybody, and welcome to the weekly market wrap for February 23rd, 2018. We had a shortened week because of President's Day on Monday. The markets were closed. And we had a pretty choppy week, actually, on Tuesday, Wednesday, and Thursday. And this morning we had a gap up. And you'd think the way the week was going, all these gaps were getting filled, except it didn't. It extended to the week's high. And if you see here, we closed right about the high for the week, which we also had on Wednesday. So what we're looking at here is an hourly chart of the S&P 500 ETF, the spiders. And one of the things that was interesting was the Fed minutes came out. So Fed minutes are notes of a meeting that the Federal Reserve had a while back, and those minutes came out, or those notes came out to kind of tell everybody what they were thinking back then. And what they were thinking originally, the market thought was positive here on Wednesday, and then all of a sudden it closed way lower than the highs. So basically, it had a reversal of about 400, 500 points on the Dow on Wednesday. Then we had some more chop into Thursday and Friday. We got back up to the highs on Wednesday. So it's kind of a bipolar market where it gets really depressed for a short period, then it turns around, goes back higher. But it's always good news to see that we close the week on the high. So we didn't get stopped out of any companies this week on the newsletter. We actually added a company to the focus list. And that's how it's going to work. If the market continues to be strong, we'll continue to add companies and we'll have more opportunities, and we won't get stopped out. In fact, we'll probably take some positive gains as time goes on, like we did last week with about a 15% winner. So um, any system that gets you longer or more exposed and more exposed as the positions go against you, it's going to be a tough system to really overcome, because eventually it'll break you. As if the market goes lower and you buy more and the market goes lower and you continue to buy, when does that stop? And that's part of the reason that you want a system that involves stop losses. So just in case it is the crash of 1987, it is the 2008 top, it is the 2000 top, it's 1929. I don't know, but you never know what's going to happen in the market. Once you convince yourself that you do know what's going to happen, and don't worry, it's not going to go down that much, we're in a good economy, or we're doing great, or whatever the situation, once you're convinced that you know where the market's going, you're in trouble. So getting into a position, whether it be position size, stop losses, taking profits, things along those lines. If you convince yourself that, hey, this market could do anything, the only thing that I can control is how I react to what's happening with the market, then that's the thing that preserves your capital in down markets and helps you stay in there to keep profits in up markets. So arbitrarily, if you start saying, oh, this is the top, we're going down from here, or this is a level where I don't think it's going to go any lower, it can't go lower because the PE ratio or whatever fundamental evaluation you have, um, I think that's a trap. I think it's something where a lot of people fall into, and by the time they realize they're in the trap, it's too late. And I do not fall into that trap, even with the insiders. Look, I've built a career on following people smarter than me when it comes to what the insiders are doing, and I don't take them for 100% because they could be wrong. Their time frame could be 13 years, whereas my time frame is 6 months. So my point is, there's a lot of different reasons why I wouldn't be able to take the pain that an insider takes, or there's a lot of reasons why the insider might be wrong. So if one insider is wrong, why would I risk a tremendous amount of money following them? What I would want to do is put them in a situation where most of the time they're right. However, in the cases that they're wrong, I want to implement stop losses so that I'm not going down with that particular ship. So that's because you don't know what's going to happen. So yeah, OLN was the company we added this week. The insider bought a couple of 100,000 worth of the stock. Last time he bought shares, it went up 35% within a year. The guy's the director of the company. He probably knows more about that company than most analysts that cover the stock, or all analysts that cover the stock. and he's putting his own money in, and he's got a good track record. Those are all great things to follow. However, if he's wrong, my stop loss is down 10%. So I'm not going to be in a position where we actually put ourselves in a bad spot. So that's kind of what my goal is I want to make sure that we manage risk regardless of how confident we are in any one position. So keep that in mind. I think it's a great tool to use, and it's really a self-reflection of saying, hey, you know what? You're not as smart as you think you are. Just take it easy. Be open to the possibility that you're wrong. So, I mean, if you guys could take away that from the video this week, I think it would be a really big help as years go on. So, this is a look at the weekly chart. So you see a couple of weeks ago, we had these two big down weeks, and now we're starting to try and recover. We'll see how it plays out next week, but we'll just keep on doing what we do, and it's been working over the long period. So I hope you guys enjoy your weekend, and hope you have better weather than we do up here in the Northeast. It's rainy and cold, and not too nice, but heck, it's a weekend, so let's try and enjoy it. Thanks so much.